Hello and welcome to the Wendell Effect. My name is Brendan Wendell and I will be guiding you through my view of the U.S. equity index futures for this week. So before we get started, just need to remind you we are not broker dealers or investment advisors. We're going to look at this information from an educational standpoint only, not telling you to buy, sell, or hold a particular securities, giving personalized recommendations. All markets involve risk of loss is always the situation. No matter what we do, we can never eliminate the risk. We just try to minimize it. And we're not subject to trading restrictions, so we got a position in a security or initiate one at any time. Please stay in touch with me if you have any questions or comments. We'd love to hear from you. You can give me some feedback. My email address is brandonwendell.cmt@gmail.com. You can also hit me up on Twitter @TraderBW. I tweet there regularly. And you can also obviously find us on YouTube. If you could, please hit the like and subscribe buttons as well as the alerts if you'd like. That way you can help us out and get notified when new videos come out. So jumping into this week, we're going to start off for July 9th, taking a look at the equity index futures, as I mentioned. Starting off with the ES, you can see that we rallied up to our number one, or what I should say 100% duplication of this preceding impulse. You had impulse, correction, impulse. Took it a little more time, so it's not as strong, but it did move up. We had plenty of clues there too. There was actually a positive divergence here. Notice prices made lower lows. Actually, let's do this. I'll go out to the actual chart and it'll just be easier to just point it out. Go out to the 1 week. There we are. And as I said, we got kind of reversal signals here when we went bullish. So we'll look for something similar for bearish opportunities as well, where prices made a new low. However, the indicator did not, so it showed that we went down on less momentum, which usually leads to a pause or reversal. It's called positive divergence. The confirmation came right there. And the reason why is because after the warning signal, we had a low that was made by price right there. However, the low could not take out 40 on the RSI. So that's one of my warning signs for reversals. You get a warning of a divergence, and then you get a follow-up with another candle that doesn't make a new, or makes a higher high or lower low, but the RSI reading is not proper. So anyway, we came back down again, another higher low, didn't go below 40, and we move up. Now, on the hard right edge, you see, if I go back to the slides, a little divergence. Prices have made about the same high, but we lost momentum on the second peak. So this is losing steam and may have a pretty good correction coming up. Going down to the daily chart, you see that divergence a little bit stronger. Prices made about the same high. And when it did, we have divergence where the momentum wasn't fueling it. So we went up on very light momentum, which is not sustainable. On the 4-hour chart, you can see we got lower highs. And we haven't made the lower low from here yet. But again, we put in a high that's not above 60, so we're likely to break to the downside. Overall, the markets are relatively flat right now we had that big move up at the beginning of June, and since I think it's about 15th of June, we've just been going sideways here for a little bit. So we'll see if that's going to continue. The Dow is our leader to the downside, while the Russell is trying to push us up. Looking at the NASDAQ, this has pretty much the same picture as the S&P. You can see we're into an area of weekly supply and also hitting daily and weekly supply zones right there. So we're stalling out, trying to chip away at it if we're going to break down below this demand. So we're stalling out right now with this weekly supply zone. We got a little bit of negative divergence where you see lower high and same high on price. So this is suggesting that we might be getting a pullback. We'll just have to see if we get below this demand zone, which is not likely to happen. We're likely to get a good bounce there. Maybe make a run up towards that next supply zone, either 16,118 or 16,900 after a small bounce off this 14,735. However, if we come down quickly and we lose a lot of this momentum or gain a lot of bearish momentum, we can actually break through this demand if the RSI goes below 40. Looking at the NASDAQ, we might have a double top formation going on. We're looking at the weekly chart. I'm sorry, this is daily, not the weekly. I thought I had the weekly up. Anyway, you can see double top formation breaking down now on the right top. Typically, what everybody waits for is a break of the neckline, which is that solid purple line. So once you get a close below that I don't go short right away because, first of all, we've got demand right here. So we're likely to get a bit of a bounce. I usually wait for a close below the neckline, then a retest of the neckline supply, and that's my entry. So keep an eye out for that. The measured move also, I guess it gives you a little bit of movement down, but not a whole lot. And then going down to the 4-hour chart, we're just kind of seeing a little more detail in that double top formation. Again, you get the measured move down towards that 14,300. If we can break that neckline, I, again, wait for a close below the neckline on the daily or at least the 4-hour chart, but it does look very bearish here. On to the Dow, that's been holding up okay. It's not very strong, but you can see we're not dropping as fast as the NASDAQ. Just different components, that's all. And we're consolidating. So when we break out this consolidation, it will go very far, very fast. Just don't know which direction, either up or down. So we're waiting for it almost to the end of the triangle. So it should pop any day now. And I really don't have any clues because we've been above 40 and below 60. So looking down at the daily chart on the Dow, you can see it's trying to make a break for the upside. We touched the bottom, but we couldn't get back down there again here, the golden triangle. So it looks like we're going to try for a breakout, but don't get suckered into buying the breakout or selling the breakdowns. Wait for a retest after you close beyond that level. And the 4-hour chart's looking pretty bearish right now. We just don't see anything until a small possible bounce here, 33,400. But that's all I've got so far as demand here. And finally, the Russell 2000 is pushing up against supply. The RSI hasn't broken 40. We may just stay there for a little while. And the supply, in theory, should hold because we don't have enough momentum to get through unless we build it up soon. But if we do drop, this was tested at 1725 with a little wick. But there are other zones below that, 1599, basically 1600 for one target, and then 1510 for the second. And let's see, that was the weekly. Daily, same picture. We got weakness staying below 60, above 40. Can't really go anywhere, it seems. And way down on the 4-hour chart, this is likely to be taken out when we go that. If we try to get a move to the upside, we're likely to get this supply zone taken out because we have already tested it a couple times. But this is an example of a possible reversal of the trend. Once again, we have the divergence, higher high, a lower high on the indicator, and followed by the peak that couldn't take you above 60 on the RSI. So that's looking pretty bearish for the Russell. Anyway, I hope you enjoyed that. If you got any questions, please send me an email, brandonwendell.cmt@gmail.com. You can also find me on Twitter at TraderBdub. And of course, if you could, please hit the like and subscribe button. We really appreciate that. You can also get the alerts, notifications as well for new videos that come out. I want to thank everybody for watching The Wendell Effect. My name is Brandon Wendell, and trade safe, trade well, take care.